What's going on? Welcome back to the channel. Today we're going to talk to you about Opendoor. I want to go over some expectations for this upcoming week, what might cause some volatility in the stock price, and why it might be a golden opportunity to buy the dip. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. So starting off with data for this upcoming week, there's a lot of big things coming out. Starting off on Tuesday, we have ADP employment, the weekly. Last came in at 11.7. Generally good stuff. And right now the market's kind of written off a likelihood of a cut for the upcoming January 28th meeting. So all this data, it's going to be actually taken for face value. And what that means is if it's positive, then in theory, the market's going to take it as positive. If it's negative, obviously, then it'll be taken as a negative. No inverse type of crap to justify a rate cut, because all this stuff is too early to really start moving a March kind of expectations. So again, that's kind of a good thing. We have a lot of big stuff coming out this week that could really push the broader market higher, although I do anticipate some volatility. As I mentioned, might be a golden opportunity to kind of buy the dip, but I'll kind of talk on that in a second. So Tuesday we have just ADP employment. Wednesday we have mortgage applications and mortgage market index. Both came in phenomenal last time. So at the end of the day, that's kind of exactly what Opendoor will be able to benefit from, increase in demand. So all the data points are really signaling that Opendoor should be doing fairly well. So we'll have to wait and see for, I guess, their upcoming earnings, how they actually did in Q4. But nonetheless, Thursday we have GDP, initial jobless claims, and PCE. So Thursday will be the big day for kind of the broader market for data points. And then on Friday we have a lot of flash data. So we have composite manufacturing services. Anything above 50 shows more of a obviously expansion. Anything below 50 shows more of a contraction. And then finally we have Michigan consumer sentiment. We have a lot of big stuff coming out this week. As far as companies unveiling their earnings, there's basically two that I feel could really move the market, and that is going to be Netflix. That's after hours on Tuesday, and then Thursday after hours is Intel. Obviously, I'm sure a lot of you are already aware it is a shorter week, so Monday the market is closed. And so, of course, then we'll be commencing Tuesday. But there is one thing that really came out over the weekend and is causing the futures to be so far in the red. So NASDAQ currently is down 1.06, S&P down 0.73, Dow is down 0.62, all because of this. So Greenland. So Trump did place a tariff, a 10% tariff on Denmark, Norway, Sweden, France, Germany, UK, Netherlands, and Finland, kicking off February the 1st. Funny enough, though, we already did see Germany immediately left Greenland because of this. So you might see, even though a lot of fear is associated to this, and you have the EU really saying that they're going to cancel all trade deals with the States, you might see a lot of the bigger names such as France, Germany, UK, they kind of pull their troops away from Greenland to avoid these tariffs. A lot of the other players such as Norway, Sweden, and so forth, they could probably care less about the tariffs in all honesty. But nonetheless, this might be a golden opportunity to buy the dip, because we all know back in April 2025, if you did buy the dip on almost any stock out there, you would be up a solid like almost 3x. In some cases, obviously some growth speculative stocks, but definitely I think this is another opportunity that the market is giving us to, again, buy the dip. And if you actually do think about it, I know on this channel I don't get all political, I just go over data points and so forth, but with midterms coming up, like Trump is laying the foundation for him to be fairly successful. And so I think in general, this won't last. So again, even more reason why potentially it might be a good opportunity to buy the dip or dollar cost average, whatever floats your boat. But as far as this upcoming week, there's not really anything specific to Opendoor that is planned. They could be announcing the date of their earnings most likely in the next 2 weeks. So that'll be them announcing the official date, not them unveiling the earnings, obviously. But as far as this goes, for shorts going into this upcoming week, 14.43% of the free float is being shorted. Works to be 112.9 million shares overall being shorted. Still see some signs of naked shorting, so more shares are being shorted than on loan. That obviously shouldn't happen. So some sketchy stuff. Based on the options, we are seeing a little bit of optimism still for it to be roughly around $7. And then the bears are anticipating for it to be sub 650. Keep in mind, All the stuff associated to Greenland did happen after hours on Friday, so I don't think anyone really kind of was doing any betting or hedging based on all that. So obviously we could be a little bit more sub that 650 mark, maybe even closer to the $6 range. Aside from that though, with it closing on Friday at 667, it is trading between this R1 and the pivot. So 723 is going to be the next strong target / resistance. It is fair to assume that that's not going to be hit possibly later in the week because of GDP PCE. So maybe the Thursday, Friday, that's where we could see a nice little recovery to that, or potentially even that 773. Flip side, 641 and 560 is going to be the next strong support points. So dependent on how bad things do get and maybe panic selling does really kick in, never know, could see that S1 being hit. And again, I do feel like that would be a pretty good time to buy, in my opinion, but you guys do whatever floats your boat and all the other fun jazz. Aside from all that fun stuff on the actual chart itself, Opendoor, it's been kind of hit and miss. I'd like to say that this is a bullish chart, which kind of shows some signs that it really did want to move higher. Like if we didn't have the whole Greenland kind of thing, then maybe we would be actually seeing a nice retest of that 50-day moving average. But because of everything, it is fair to assume that we will be bouncing off of this 10-day moving average, and that's currently sitting at 664 and most likely trending towards that kind of $6 range. In my opinion, that's probably where we could be heading next. Of course, based on the technicals, that would be a very big deal overall, but nonetheless, like I said, Opendoor is a very volatile stock. And I think in overall, it's doing fairly well. I know a lot of people seem to be really hating on Opendoor, and that's just, in my opinion, because of Eric Jackson laying the foundation for people to assume $82. And he kind of kept talking about it. I know he doesn't mention it all that much anymore, but he just kept mentioning that, are we at 82? No. Are we at 82? No. Blah, blah, blah. So people automatically assumed that we were just going to go to the moon, continue straight up to like $80. And that's not realistic by any means. Even here, when it did run up to like that $10 range, a lot of that was just momentum. Kaz at that time didn't really incorporate a lot of his ideas. So this was very, very speculative. I think it was kind of due for a little bit of a pullback. But since then, and obviously us trending down, Kaz has really put out a lot of good operational updates. And so I think the foreseeable future should be pretty good overall. So let me know your thoughts on Opendoor. Where do you see things going this week? Do you plan on buying the dip? Are you kind of getting out and just waiting for the dust to settle? What's your kind of general thoughts? One final thing, if you're looking for some solid buy signals, pop over to my Patreon. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.